Hello. It's hard to believe it's the last quarter of 2019. Are you starting to stress about your 2019 tax return? Have you done any tax planning? If you plan for the remainder of 2019 as well as 2020, tax return will not be a stressful situation. If you have any life-changing events, such as a marriage, a divorce, a birth of a child, a new job, another job, maybe a part-time during the holiday season, or even purchasing a home, you should be contacting your tax professional to discuss this. Over 100 million people get an average of a $2,400 refund. If you plan appropriately and adjust your withholdings, you could get that money in your pocket each pay versus giving the government a loan. What you need to do for that piece is provide your recent pay stubs to your tax professional, and they can calculate and adjust your withholdings. Another tax tip: start collecting your information sooner than later. All throughout the year you've been giving to charitable organizations. Put those in a file folder marked 2019 tax return, as well as anything else you might receive during the year. The main part will come in February 1st forward, but some you can actually collect now. Tax tip number 3, don't forget your medical expenses. While the tax reform did raise the standard deduction, many people do have a large amount of medical expenses. These would include your health insurance premiums, as well as your long-term disability payments, as well as anything medically necessary. So your prescriptions, your co-pays, dental, eyeglasses are a large amount that typically people pay out of pocket. If that adds up to more than 10% of adjusted gross income and you're able to itemize, you can definitely use the medical expenses as a benefit to you. Also, don't forget your mileage as you're going through and going back and forth to the doctor or the hospital for tests. Tax tip number 4. If you are over 70 and a half and are required to take a minimum distribution from your retirement account, consider giving that to your favorite charity. You receive a couple benefits. Number 1, it's going to reduce your taxable income on your return. 2, you're giving to your favorite charity that you already would have been giving to. Tax tip number 5. If you are planning to pay for college education expenses for your child or your grandchildren out of a 529 plan, make sure if you have any expenses that need to be paid out of pocket that it relates to tuition and qualified fees. There is wonderful credits out there, the Lifetime Learning as well as the American Opportunity Credit for college students. The individual that will be able to take that tax credit is normally the parents because they're still claiming the dependent that's going to college. Until next time, Sandy Furuya, Wamhoff Accounting Services, where we tax plan for the future.